because I gotta get the fluff off me. I know.
I like almond milk anyway. I could drink almond milk all the time. I don't have a problem with that.
Man, when you talk about being obsessed, I was obsessed with milk. I remember going to Stephen Ackley's house. Right, I got to sleep over there and be in the backwoods and whatnot, doing a little camping with his brother, and I feel like Dean was there, maybe Jason Holt or something. I don't know, but like you walk in his like garage area, I was like, "Why is y'all refrigerator out here?" He's like, "Oh no, that's our second one." And I was like, "Y'all have a second refrigerator?" Right? He was like, "Yeah, yeah, but this is mostly just for me." And I'm still like, "Are you not understanding? Like that's a big deal." I don't even have a shelf in my refrigerator, let alone the whole fridge. And he opens it up, and it's like gallons of milk. To which
Wow.
I asked, what anybody would ask, why do you have all this
Right.
milk? Right?
He drinks that much milk.
Yeah, he was drinking like a gallon a day, man, to try to gain weight. Now, brought that back to my mom, and she was like, yeah, so do you. Like, why do you think we buy like 2 gallons at a time and it's every day? I was like, wait, what? I don't drink a gallon of milk a day. She's like, yes, you do. You put sugar in it. You put the chocolate syrup in it. You eat it with cereal. And then you just drink it straight up. Like, I did this weird thing where I would dip my bread in it. I don't know why. But I would dip my, like, white bread in my milk. Yeah, so something I just really enjoyed now is trying to kill me. So, I like the almond stuff, but for whatever reason, man, that whole milk, I still do it every now and then.
Oh yeah, I still like regular milk, without a doubt.
Absolutely.
But I could go almond if I had to go almond.
Nice. Well, I'm going to talk to the audience for a minute, buddy, and we'll come right back to you. You ready?
Sweet. Yep.
All right. Well, welcome back. It's What the Frap. I'm J-Zilla, right? It's been a while. Thank you guys for being patient. I've got with me my main man, Craig Juday, right? Talking a little stocks. What's happening, man?
I'm all right. How you doing?
Pretty good, except for that intro. Man, I'm a little rusty. Just a little rusty. But it's
It
all
was all
good.
right. I liked it. I liked it.
Yeah, man. How have you been?
Good. Good. I've been good.
Family
I
life, and you got.
a lot of changes recently. A lot of changes. Good changes, but good.
Yeah, well, for
All
one,
good.
I'm looking at this beautiful carpet that looks unsullied by people trampling over it. Is this a
Yeah.
new
Keep the
spot?
door shut. No children. No dogs. This is my safe space.
This is my safe space. Dare I call it a man cave of sorts?
Yeah. Jasmine has some ideas for other parts of the room, but I'm gonna put that off as long as possible.
Well, here's to you, man. Keep up the good fight, man. So
Thanks.
look, last time we talked on this show, you were a Walgreens guy making the transition to full-time day trader. It's day trader?
Yep.
Yeah. So talk to me a little bit about that. Where are we at now?
Well, full time as of I know I just posted it on Facebook and I can't remember the date anymore, but my last day at Walgreens was August 31st.
Mm-hmm.
I've been full time into this since then, officially full time. But I mean, I've dabbled for years. But yeah, I left Walgreens August 31st, and now I do this full time from home.
That's amazing, man. How was that transition? Like, cause
Scary,
right,
scary,
cause even
so scary.
me with my little bitty
Dude,
jobs,
I worked at Walgreens forever.
right?
Like I started there when I was 17,
Yeah.
17, 18. Been there for forever.
Mm-hmm.
I knew exactly how to do my job. I had stability, benefits, et cetera, et cetera, et cetera. Yeah, that's incredibly scary. But I knew what I wanted to do. I had a roughly 3-year plan in place, and we made it happen. And I say we because without Jasmine, this would not have happened. Period.
Shout out to the lady.
Like,
man, let me tell you, man.
Yeah.
I'm with you on that. I don't understand how I didn't just like wander into the street and get hit by a car before I met, well, not met, but before I married my wife. So I'm right there with you, man.
Yeah, I mean, we had a plan. Like, she was in PA school, and we both knew that before I could do this full time, we had to get her through PA school. We had to get her working, stable, at a job with the income level that we felt comfortable for me to make the change, and, all those different things. So we had a plan, and we executed. What it comes down to, we executed the plan beautifully, and I give her all the credit. Because PA school, I don't know if there's anybody that has either went through it or been around somebody that has went through it, but it is brutal.
Well, you sound like a coach, man. And I told you before, you kind of invoking the Zaydan, right? You got the beard, the glasses, and the hat.
Big brother Brian. I hope he
Shout out to
watches
that guy.
this.
Oh, he will. I will shove down his throat. Honestly, when I was in Tennessee, I didn't even realize like Jordan, his son, was paying attention to my little show. But I went on like a little hiatus, and he was like, "Haven't seen anything posted on What the Frap." So What the Frap? And I was like, "Oh, okay. I'm gonna post something. I'm gonna do it."
I talk to him on rare occasions, but it's far and few between. We're both. You know how it is.
Oh yeah.
Everybody's busy. We got some distance between us now, so stuff.
Not even the distance, man. The family, the scheduling, and all of that.
Well, Jordan does 18 different things a day.
Yeah.
He's a superstar in every sport known to man.
But looks cool while he does it. Boom, as I point to the camera.
That.
Right. Shout out to Jordan Zaydan. That kid's gonna be amazing.
Oh yeah, he'll pay Brian's bills one day.
I heard that. I know Brian's like counting days. Hey, remember that one time I took you to practice?
Yep.
Huh?
Yep. Fed you my whole life, boy.
Oh man, but I'll tell you, I love how we're getting on this tangent because like seeing like proud fathers like that, and shout out to Bridget too, man. You talk about a mama bear.
I haven't met her. I've seen her. I've seen him post about her. Haven't met her, but all I know is if she can put up with Brian Zaydan. Good woman,
I told her, I was like, you're so much better now. Like, what is that? Right? Because he said the same thing about me. He's like, man, I came a long way, buddy. Because he saw me in some very, very low points. And, but I asked him, so one, me and Bridget put together that we were from the same boxing gym there in Columbia. Right? Shout out to Dr. H. Right? Because so we were there, and I didn't know her, but I know she boxes, right? And that's when it clicked for me of like, oh, I got it. That's all he needed. Somebody with a strong left hook. And now, I'm gonna say like he'll hate this, but he's running Nissan, and Jordan's doing well, and she's keeping that whole household in line. It's great.
Yeah.
So going back to you two making the 3-year plan. Now, is this one of those things where like you were like, okay, here's the plan, do you agree? Because a lot of times me and my wife, we do give and take, but a lot of it is her planning and me like signing off on it. Like, and I feel like she does that just to help me keep my ego. She's like, here's the entire life. What do you think?
Yeah, I went to her and told her what exactly I wanted to do. But the one thing I'll say about her, because this whole process is incredibly risky, right? Changing careers is risky, let alone into something like this, where there's no quote-unquote guaranteed income. It's incredibly risky, right? But she was behind me 100% from day one. And there was some give and take. Point A was get her through PA school.
Mm-hmm.
That had to be accomplished no matter what. That was her dream, something she had been working on for a very long time. So that had to happen first. But in that whole process, I was still studying. But yeah, she backed me 100% of the way.
And PA school, is that physician's assistant? What is it?
Yeah, like a nurse practitioner, physician assistant, that type. If you go to the doctor,
mm-hmm.
that's who you're seeing.
Nice. Yeah. So, and that's great, right? To be able to say, hey, here's what I want to
Yeah.
do without everything completely mapped out. 'Cause there's so many variables during a transition like that, right? Like that.
COVID was a big one. COVID was major.
Just a little bit. You know, the
Big
omnipresent
wrench in
COVID.
everything.
Oh my goodness.
Everything.
It's literally in everything.
I won't lie. That kind of expedited my leaving Walgreens a little bit earlier than maybe anticipated because it was horrible. Horrible.
Right.
I feel so bad for anybody that works in any shape, way, or form in healthcare, like Jasmine, PA, whether you work in a pharmacy, retail pharmacy, doesn't matter. Anything in that realm dealing with COVID,
Right.
I feel for all those people.
With my daughter, we gave our kids the option for the vaccine and whatnots, and so one of them, the youngest one, when she finally was like, hey, I think I do want to get the shot, because at first she was against it. I told her, well, I mean, you look into it yourself, and I want you to feel comfortable, right? Because in our house, it's like, if you get the shot, great. You kind of follow, COVID protocols, right? Because it's not 100%. Nothing's 100%. If you don't, you're going to follow COVID protocols, right? And so when she did it, I literally asked the physician, because I was looking at the line and stuff. I was like, no, we did it like a Walmart. I was like, man, are you allowed to take tips? He's like, no, sir, we're not. I was like, man. I said, so if I just drop like some, money or got you lunch and just dropped it there, you can't touch it. Like, oh, no, sir, we can't. I was like, that sucks.
Yeah.
Because you people deserve so much more. It's crazy.
Yeah, it's tough.
Yeah.
But yeah, we fought through that. Tooth and nail, we fought through it. She did a lot of fighting with PA school. I did a lot of fighting for this. But we made it. So we just moved. She's in her job. I'm transitioned into mine, and we're rolling right along.
That's awesome. How's she liking it?
Man, I mean, she loves it. I mean, it's tough, right? Like, it's tough, especially dealing with COVID. Actually, where she works, they've had a couple COVID outbreaks, either with patients or staff or whatever. And that makes it tough, day to day, very tough. But she's also mentioned to me that she feels like this job is what she was put on this earth to do. Like, she's a caregiver. She's always been like that. She's that for the household. She's transitioned that to a work life, and she's doing something at the end of the day that she loves to do. And she's making a huge difference. Like, what I'm doing, I love it. I am making zero difference in the world. Like, really, this is just for me. But what she does on a daily basis is, I mean, anybody in healthcare makes huge differences in the world. So, but yeah, she loves it. Absolutely loves it.
But you got to think about like short term, long term, right? You see, we're trying to sound day tradery. Short term, long term, right? For people in that medical field, they're absolute heroes, right? Military, like all these people who are doing things that help right away, right, in present day.
Right.
But people like you keep the whole thing going, right? You're a consumer. I mean, you're working in this stock market.
Keep the wheel turning.
Right, but you're also not the evil villain, even though you got the chair sway going. All you're missing is this long, evil-looking beard and the cat.
Well, what's funny is a lot of people think I am. I do some short selling, and dude, I'm gonna tell you the reaction you get from some people when you short sell their beloved stock. Like, oh god, you're the worst person on earth. Like, so yeah, at times I'm the villain, but I don't.
I love it. Now we're getting into our next little section here, right? Because I look at all your stuff, and it seems like I'm watching a Matrix movie, right? Like, you even just now saying, some people look at me as an evil villain because I short sell. I'm like, what did you just say? Like, what is this short selling stuff? Can you break it down for me?
Yeah, so essentially everyone knows the general gist of a stock. You buy low, right? You sell high. That's how you make money. You buy it at $1, you sell it at $2, you make money. That's the thing everybody knows. But actually, in the stock market, you can reverse that. You can bet on a stock to fail. So if I think a stock is overextended or whatever my thesis is, I can choose to short that stock and actually bet that it's going to fail. So I would actually hope it goes from $2 to $1 or whatever the case may be. But you can actually, you can short sell. It's more involved. It's a little bit riskier. There's more factors that play into it. You got to find shares to borrow and all these different things. But I do a fair amount of that for sure.
Okay, now
So
I can see how they look at you as like the evil villain, because whether it
yeah,
happens,
because I'm betting on the stock that they love to fail.
right,
Yeah.
their baby, right? In a lot of cases, you
Yeah.
know.
Absolutely. A lot of these companies that I'm shorting, people think they're the next Microsoft or Google or Amazon, or they're going to cure cancer,
Mm-hmm.
which all of that is as far from the truth as could humanly be possible. Like, it's just not going to happen. Like, maybe 1 out of a billion that might be the case, but 99% of the time these things fail. So I know that, and I play statistics. You know,
Right.
I'm not an emotional trader, emotional person. I just trade the numbers and the statistics, keep things mathematical.
Mm-hmm.
But yeah, people get really offended when you short their beloved company.
Oh, I know the
It'll
feeling.
hurt some feelings.
I know the feeling. Like I recently had to do some paperwork, and with our LLC, we don't have any losses to show for our last tax period or whatever. And so there's no losses, there are no gains, so they couldn't really quantify it. And so as I'm sitting here trying to explain, because we have like timesheets and stuff, and here's how much time I shot each episode of whatever, or editing time, all that. But she was like, so you make videos and you post them on Facebook? Like, oh, I was so hurt. It was her tone and everything. Like, you sound like my 12-year-old nephew. Why should we count this as a business? What did you just say? Oh, I was so in my feelings. I was like, I wish I could just march down there and I'll show her all this stuff that I do. Right? You know, it's work.
Show your revenue sheets after a couple years.
Hopefully, that'd be great. But yeah, definitely some serious motivation. I was like, man, I gotta do something better. Kind of like you with the pandemic, right? This was a big catalyst for a lot of people who realized, hey man, what I'm doing isn't enough. And I have options. I do have options. I don't have to just work here, until retirement, right? That's not the plan. Just to work, put my head down, work till retirement. I mean, unless you're doing something that you love. Otherwise, you're just hoping for a good retirement, and then I'm gonna go see Greece, right? Then I'm gonna enjoy time with my family. A lot of people woke up to that because of this pandemic, man. So, I mean, people putting plans together. I love how you guys planned it, though. 3-year plan. She gets out of PA school.
Yep.
You make the transition, and now you're Morpheus. It's great.
Morpheus.
What?
It took a long time. It was a long 3-year road, and it felt like it was never going to arrive, but made it.
Right. So speaking of hardware, right? Yeah, so when I look at stuff like this, Mr. Juday, what the frap, man?
So this, I just say, first of all, company, pretty irrelevant. The pattern is all that really matters. And this is over the course of an entire year, right? This is a 1-year chart. So I'm not really trading 1-year charts per se. I'm trading stuff in that day, in that moment. But every chart I trade, I always look at big picture, right? So I always look at a year-long chart, 6 months, 3 months, whatever. But anytime I pull up a chart over the course of a year, whatever, every chart, every stock I trade has to fit essentially this pattern, right? Like, I want every stock I trade to look roughly like this. I could pull up 50 charts or more that all pretty much follow the same criteria. So I want everything. This is what's ultimately called a supernova pattern. All right, this thing went from, at one point in time, the low was 6 cents, and it got all the way up to $3.40. Both amounts sound pretty low, but when you think about that and add in some share size, right?
Right.
So at one point, this stock, before this massive, huge run up, at the low point before this massive run up, it was at 40 cents, right? I could buy 1,000 shares of that. That's not a huge investment, right?
Right.
1,000 shares, $400 this stuff. Goes all the way up to $3.40. Right? You sell that 1,000 shares at $3.40, you just made $3,000.
Right.
Like, in a day, too, whatever. So every stock I trade has to follow this criteria. I'm hunting volatility at the end of the day. That's what I'm looking for. I'm looking for these volatile stocks that move extreme points one way or the other. So if there's no volatility, I'm not interested. Like, if you look at the left-hand side of this chart,
Right.
or the right hand side of this chart. None of that interests me. Only looking for this middle ground here. That's what I'm hunting. I'm hunting these supernovas that go completely parabolic, have these huge crashes. So this thing went from, like I said, 35, 40 cents in just a couple days, all the way up to $3.40. Like, just a couple days. That's insane. That's like thousands of percent, right? Like 3,000% or something crazy. And then look how, I mean, 2 days later, it's back down to 75 cents.
So what happened there? So I don't know if you can see this now. I'm gonna butt in with my mouse. Can you see my mouse?
I can't, but it's fine. I can pretty much tell you, like, because every stock that I trade has this pattern, and they all pretty much follow the same criteria. There could be some good news that kind of ignites this fuel, right? This initial little small run up could be because of some good news. But then, you ever heard of? Everybody's heard of Wolf of Wall Street,
yes,
right? Everybody knows Jordan Belfort, Wolf of Wall Street. Dude is he was not a good trader. He wasn't really a trader at all. All he did was promote these crap companies, and he would artificially increase these prices, like boiler rooms. You've heard the term boiler rooms. They do the same type of thing. Well, now in modern day, there's no boiler rooms. There's not really any Jordan Belforts of the world because the SEC is kind of, anyway. Twitter now, social media, Twitter, all these gurus, quote unquote, loosely use that word, will promote these stocks. So like this one in particular, during this time period, there were so many gurus on Twitter saying this is going to be huge. This thing's going to $20 a share, and they have hundreds of thousands of followers, and they'll jump in these things, and it will create this artificial move. This stock has no business being over $1 a share, but it'll create this artificial move that I just take advantage of.
I see. So when you do that, does that, like, I mean, for the company, I guess, is that good or bad?
Yeah. So what the companies oftentimes do, because a lot of times the companies will be in on these pumps, as they're called. The companies will throw out some PRs.
Wait, what are PRs?
Press releases. Press releases. They'll throw out some press releases.
Okay.
And they could have some legitimate good news, but they'll put out press releases like, "Oh yeah, we're doing this. We're releasing this new product that's gonna cure COVID or what." Like, they will throw out some outrageous press releases, and they can pretty much say whatever they want in these press releases, because at the bottom of their press release, where no one reads in super small print, they'll say these are all forward-looking statements, not not entirely factual, backed by data, whatever. Like, they're protecting themselves, but no one ever reads down that far. They just read the headline, stock goes up 2,000%. So there's a lot of people involved in these pumps, and they will go parabolic, but as fast as they went up, they will come back down.
So when you talk about the SEC, it's not my beloved football conference.
No.
We're talking about
Securities and Exchange Commission.
Yes, okay. Yeah, so now, have they not regulated that? Like, these pumps?
So that's the thing, like,
how would you?
It's not entirely illegal, right? It's unethical. And there are people who take that unethical thing or level to an illegal level, where they throw out some completely fictional revenue numbers or hard numbers. That's very illegal.
Right.
But these companies, this one in particular, they had a little bit of good news, and I remember a little bit they had some good news, but then it was just press release after press release after press release, which is not illegal to do. They're just forward-looking statements. A lot of times it's complete BS, or you'll see these biotech companies that'll have a study of 10 people, and of those 10 people, 6 of them showed improvement. So like, oh, we have a 60% success rate on this, but it was such a small sample size. Can you really scale that? You don't know all the different underlying factors. They can highlight, and romanticize whatever part of their study that they want to push.
Right.
So it's an artificial move, but these companies, the people that own this company, what they did and what they often do is they'll get this jacked up artificial move, and then they will do what's called an offering, where they will offer up insiders free shares to liquidate at this artificially increased price. So the insiders, the CEOs, those type of people make a ton of money it crashes the stock prices, which is exactly what happened. And everybody, the retail traders get screwed because they're buying it, $2-3 a share, and then within a day or two, it's down back to below $1.
So now this other this other peak, right beside it, what happened there?
Yeah. So, and this is common. I can show you, like I said, multiple charts that follow the same pattern. So you have this huge run up, followed by this huge dip, and there are a lot of people. You probably heard the term BTFD, by the effing dip. Have you ever heard that?
I have not.
There's a lot of traders. Yeah, there's a lot of traders that do that. They dip buy. They like to dip buy these massive run ups. So they'll wait on these dips. So this thing went up to over $3 a share, came right back down to under $1, and a lot of people are dip buying that because they want in on the next move. So they're waiting on that dip. So they hit that dip, and then it does have a nice little secondary run up. But then that comes right back down too.
So for long-term traders, right? If I'm just in this company for whatever reason, maybe I'm the owner and look, I believe in my company. And from the beginning of the year, even though it trends, I mean, they looked like they were down for a little bit, then they were trending up, and then this huge, a big hump right before the ridiculous hump because of the big hump, right?
Right.
So when I look at that, but once they it corrected itself down, they're still operating at a higher level than they start at the beginning of the year.
Yes, absolutely. And what creates this whole little snake that's, higher than what it was at the beginning of the year, the term that I use that is not a nice thing to say always, but they're bag holders. They are people who bought the stock at these crazy, outrageous levels. And they don't want to sell until they recoup some of their losses.
And the losses don't count until you actually sell, right?
Yes, which I hate that term. I hate that.
Losses?
I don't know. I don't agree with that. I think, if you, some people are like, it's not a loss until you sell. Like, I don't agree with that at all. That's why I cut losses just immediately. But that's a whole nother tangent.
So
anyway, these are bag holders. Yeah, these are bag holders. That don't want to sell until they recoup some of their money. So they're holding a lot of shares that they bought in here that they're not selling. So it's kind of keeping it, at these levels.
But is that good for the company or someone who was in before any of the increases?
Yeah, it's good maybe for the insiders. That's about it. The quote unquote CEO, CFO, who are probably some scammy, people, but
we don't want
to
assume.
All these companies are just so terrible. That's why when I read, there's so many people that think this is like this particular company. I can't even remember exactly what they did. I feel like it was clothing or something that they were doing, and it was going to be a huge thing. I don't know. It doesn't matter. The amount of people that were promoting this, thinking it was going to be some massive scaled business, was crazy. Yeah, I could pull up another chart that will look just like this. Yeah, this was another one.
Ooh.
They're all going to look like this. They all have these massive run-ups and fails. This one didn't really have a great bounce. At one point, you maybe could have bounced it from 17 cents to just under 30, so almost 100% on your money on a bounce. But every chart I will pull up will look the same.
But the end of the year for the company and the insiders always look the same. Like it's higher than it started off with, right?
Right, and it's the bag holders. That's what that is. They're holding that up.
Can't the company use that as like, hey, look how good we're doing?
Yeah, because the way companies come up with their market caps that they present to investors or future investors or their stockholders or whatever, they'll always refer to their market cap. Their market cap is going to be their share price times however many shares they have available for people to buy. So if their share price at this particular company right now is $3.23 versus the beginning of the year it was just under $2. So you multiply that number times 20 million shares or more that they have available. That makes that number look a lot more attractive.
Right.
But they all look like this. This was a major one. This thing went from 10 all the way up to 65. But I mean, that crash, look at that. Like they all look like this. At the end of the day, this is what every stock I trade follows this framework.
So let me ask you this. Shorting a stock, does the graph look inverted?
Uh,
Or are you hoping that the
so
graph looks inverted when you're shorting a stock?
so when I say I follow this framework, I have like it's like a 7-step framework I've essentially learned that revolves around what you see now. 1, 2, and 3 is essentially the massive run up. 3 is the huge spike. That's what that is. 4 is the huge crash. 5 is the bounce. 6 is the crash after that, and then 7 is just when it falls into oblivion.
Right.
It's gone. But so when I'm shorting a stock, I'm waiting on what's called the backside. So the huge run up.
Mm-hmm.
This is where it can get technical too. But you see all these blue candles down here at the bottom?
Yes.
That's volume. That's the amount of people that are buying or selling that stock on that given day. So you can see during this huge run up, right? There was huge volume coming in. Right? Like massive versus what it is now. So you're waiting on the backside, which is these huge fall offs, also followed by huge volume decreases.
Oh.
That's how you know you're at the backside.
So for my out there, we're looking for that positive slope, and then you're waiting for the negative slope when you're shorting.
Correct. But you have to be careful because there are short sellers who will try to short too early. Like a lot of short sellers, maybe right in here, they were like, oh, this is not worth $40 a share. There's no way it's going higher. Well, then the next day it went from 40 all the way up to 55. So they could have lost their whole account if they didn't cut that loss. So you have to be careful when you short sell because it could just go way higher. And so the difference with shorting and longing, on the long side, at worst, let's say you put in $100 at $1 a share and it goes to zero, right? You've lost $100. On shorting, you can lose more than what your initial investment was.
Ooh.
Because you're essentially trading on margin. So if you put in $100 at $1 a share because you think it's going to go to 50 cents, but then it goes up to like $2.50, you've lost your $100 plus you're in the hole another $50 that you got to pay your broker.
Oh, okay. So it is some risk to the. It's not just you sitting back safe and fat and like, all right, they're gonna fail.
Yeah, there's risk. Now, keep in mind, I have a list of rules which I can show you. I don't mind sharing them, but my first rule is cut losses quickly.
Mm-hmm.
If I'm wrong, if I get into a stock, I have a specific thesis, specific plan. I think it's going to go a specific direction. If it goes against me, I'm out. I'm out immediately. I used to really, really care, and this is something I've grown with a lot of the last 6 months, 3 months even. I used to really, really care about my win rate. I want it to be right at least 70% of the time.
Right.
I have learned as my win rate has went down, my P&L has went up because I don't care anymore about being right. If I'm wrong, that's fine. I'm wrong. And I just cut my loss, keep that super small and let my winners run. So if my win rate now is only 50%, I don't really care because if my 50% winners are an average 20% gain and my average loser is 1%, I don't care.
What was that term used? P and what?
Profit, P&L, profit and loss.
P&L. Oh, P and L.
P&L, yeah.
Okay,
P&L.
Sorry, look, you can tell I'm definitely an outsider.
No, that's
this is
fine.
interesting,
I was an outsider.
Man. Like this stuff is right up my alley. There's some risk, there's competition, there's
there definitely is risks. Yeah. But because some people tell I've heard so many times, oh, you're gonna lose all your money, you're gonna lose it all. Like, yeah, I would lose it all if I'm wrong and just let that loss run to infinite. Like, yeah, but I don't do that. Like, if I'm wrong, I cut my loss, keep it minimal, I keep it moving. I never invest my whole portfolio. I have a system. I have a whiteboard that you can't see. And on my whiteboard, I have a couple risk rules. And the top risk rule is 1% of my portfolio is my max risk. So if in my portfolio, I'm down 1% on the day, I'm done. That's my max risk. And in any given position, I will never put more into a position than whatever 10% of my portfolio is. So if I got $1 million portfolio, the most I'm going to put in is 10% of that. That's it.
Okay.
Or $1,000, whatever. The numbers don't matter. It's the percentages that you have to keep in mind.
Right. So that 1% is what, 1,000? I mean, like you said, numbers don't matter. But how many rules do you have? Do you have like a?
I'll pull up. Yeah, let me show you.
Please.
So yeah, these are what I live by, right? If I break these rules, which I'm working on my trading psychology, sometimes it's really hard to follow these verbatim. However, if I break them, I lose, right?
Right.
I either lose money or I win money and develop bad habits, which is worse. You know, like I've seen some short sellers specifically that will short a stock and it continues to go up and up and up and up and up. And instead of them cutting and getting out, they will actually do what's called adding to their position to try to get their average up. So then when it goes down a little bit, they can try to recoup some losses. It's a terrible thing to do though, because if they're wrong and it just keeps going up, they just lose more and more and more and more. So instead of cutting losses quickly, they're trying to justify something in their head why they're going to be right. But as rule number 5 says, I have to respect the price action. The market is right, not me. You can't will something to move the way you want it to move. It's just not going to happen. So one of my, I don't have it wrote down here, but something I'll never add to a loser. Some traders will add to losers to try to get their average up or down depending on what they're doing. Right. I don't do that. I've never once added to a loser. I'm not comfortable doing it. I don't think it's something I'll ever do. But you'll see that a lot. If you really get into this and follow other traders or watch them, sometimes they will add to losers, especially when they're shorting. They'll add to it with the expectation of it going down. And I mean, a lot of times they're right, but dude, when they're wrong, they can really blow up an account. They can lose hundreds of thousands, tens of thousands. They can lose more than they put in. Like they could literally blow up their account. So I just don't do that. So this is what I live by. Every day that I trade, I follow these rules. It's just what works for me. A lot of these there's been a couple people that have helped me tremendously with my strategy or rules or whatever, development. And they help me with a lot of this too, just as far as fitting my strategy or whatever, or my mindset or what I'm good at, bad at. So that's just works for me. So that's what I use.
Okay. Oh, shoot. Hang on.
What?
No, I gotta take another break. My bad.
Oh, you're good.
Let's see. Where were we at? 107. I'll say 106. Hang on. All right, big boy.
sell early.
Come up. But
That
then
is,
the company,
they're holding that
but
up.
can't the company use that as like, hey, look how good we're doing?
Yeah, because the way companies come up with their market caps that they present to investors or future investors or their stockholders or whatever, they'll all, always refer to their market cap. Their market cap is going to be their share price times however many shares they have available for people to buy. So if their share price at this particular company right now is $3.23 versus the beginning of the year it was just under $2. So you multiply that number times 20 million shares or more that they have available. That makes that number look a lot more attractive.
Right.
But they all look like this. This was a major one. This thing went from 10 all the way up to 65. But I mean, that crash, look at that. Like, just, they all look like this. At the end of the day, This is what every stock I trade follows this framework.
So let me ask you this. Shorting a stock, does the graph look inverted? Or are you hoping that the graph looks inverted when you're shorting a stock?
So when I say I follow this framework, I have it's like a 7-step framework I've essentially learned that revolves around what you see now. 1, 2, and 3 is essentially the massive run up. 3 is the huge spike. That's what that is. 4 is the huge crash. 5 is the bounce. 6 is the crash after that, and then 7 is just when it falls into oblivion. It's gone. But so when I'm shorting a stock, I'm waiting on what's called the backside. So the huge run up. This is where it can get technical too. But you see all these blue candles down here at the bottom?
Yes.
That's volume. That's the amount of people that are buying or selling that stock on that given day. So you can see during this huge run up, right? There was huge volume coming in. All right, like massive versus what it is now. So you're waiting on the backside, which is these huge fall offs, also followed by huge volume decreases.
Oh.
That's how you know you're at the backside.
So for my math heads out there, we're looking for that positive slope, and then you're waiting for the negative slope when you're shorting.
Correct. But you have to be careful because there are short sellers who will try to short too early. Like a lot of short sellers maybe right in here, they were like, oh, this is not worth $40 a share. There's no way it's going higher. Well, then the next day it went from 40 all the way up to 55. So they could have lost their whole account if they didn't cut that loss. So you have to be careful when you short sell because it could just go way higher. So the difference with shorting and longing, on the long side, at worst, let's say you put in $100 at $1 a share and it goes to zero, right? You've lost $100. On shorting, you can lose more than what your initial investment was.
Ooh.
Because you're essentially trading on margin. So if you put in $100 at $1 a share because you think it's going to go to 50 cents, but then it goes up to like $2.50, you've lost your $100 plus you're in the hole another $50 that you got to pay your broker.
Oh, okay. So it is some risk to the. It's not just you sitting back safe and fat and like, all right, they're gonna fail.
Yeah, there's risk. Now, keep in mind, I have a list of rules which I can show you. I don't mind sharing them, but my first rule is cut losses quickly. If I'm wrong, if I get into a stock, I have a specific thesis, specific plan. I think it's going to go a specific direction. If it goes against me, I'm out. I'm out immediately. I used to really, really care, and this is something I've grown with a lot of the last 6 months, 3 months even. I used to really, really care about my win rate. I want it to be right at least 70% of the time.
Right.
I have learned as my win rate has went down, my P&L has went up because I don't care anymore about being right. If I'm wrong, that's fine. I'm wrong. And I just cut my loss, keep that super small and let my winners run. So if my win rate now is only 50%, I don't really care because if my 50% winners are an average 20% gain and my average loser is 1%, I don't care.
What was that term used? P and what?
Profit, P&L, profit and loss.
P&L. Oh, P and L.
P&L, yeah.
Okay,
P&L.
Sorry, look, you can tell I'm definitely an outsider.
No, that's
This
fine.
is
I was an
interesting, man.
outsider.
Like this stuff is right up my alley. There's some risk, there's competition, there's
There
math.
is, there definitely is risks,
Yeah.
but if you, because some people tell dude, I've heard so many times, oh, you're gonna lose all your money, you're gonna lose it all. Like, yeah, I would lose it all if I'm wrong and just let that loss run to a infinite. Like, yeah, but I don't do that. Like, if I'm wrong, I cut my loss, keep it minimal, I keep it moving. Like
Right.
I never invest my whole portfolio. I have a set system. I have a whiteboard that you can't see.
Mm-hmm.
And on my whiteboard, I have a couple risk rules. And the top risk rule is 1% of my portfolio is my max risk. So if in my portfolio, I'm down 1% on the day, I'm done. That's my max risk. And in any given position, I will never put more into a position than whatever 10% of my portfolio is. So if I got a $1 million portfolio, the most I'm going to put in is 10% of that. That's it.
Okay.
Or $1,000, whatever. The numbers don't matter. It's the percentages that you have to keep in mind.
Right. So that 1% is what, 1,000? I mean, like you said, numbers don't matter. But how many rules do you have? Do you have like a?
I'll pull it up. Yeah, let me show you.
Please.
So yeah, these are what I live by, right? If I break these rules, which I'm working on my trading psychology, sometimes it's really hard to follow these verbatim. However, if I break them, I lose, right?
Right.
I either lose money or I win money and develop bad habits, which is worse. I've seen some short sellers specifically that will short a stock and it continues to go up and up and up and up and up. And instead of them cutting and getting out, they will actually do what's called adding to their position to try to get their average up. So then when it goes down a little bit, they can try to recoup some losses. It's a terrible thing to do though, because if they're wrong and it just keeps going up, they just lose more and more and more and more. So instead of cutting losses quickly, they're trying to justify something in their head why they're going to be right. But as rule number 5 says, I have to respect the price action. The market is right, not me. You can't will something to move the way you want it to move. It's just not going to happen. So one of my, I don't have it wrote down here, but something I'll never add to a loser. Some traders will add to losers to try to get their average up or down depending on what they're doing. Right. I don't do that. I've never once added to a loser. I'm not comfortable doing it. I don't think it's something I'll ever do. But you'll see that a lot. If you really get into this and follow other traders or watch them, sometimes they will add to losers, especially when they're shorting. They'll add to it with the expectation of it going down. And I mean, a lot of times they're right, but dude, when they're wrong, they can really blow up an account. They can lose hundreds of thousands, tens of thousands. They can lose more than they put in. Like they could literally blow up their account. So I just don't do that. So this is what I live by. Every day that I trade, I follow these rules. It's just what works for me. A lot of these there's been a couple people that have helped me tremendously with my strategy or rules or whatever, development. And they help me with a lot of this too, just as far as fitting my strategy or whatever, or my mindset or what I'm good at, bad at. So that's just works for me. So that's what I use.
Okay. Oh, shoot. Hang on.
What?
No, I gotta take another break. My bad.
Oh, you're good.
Let's see. Where were we at? 107.
Continues to go up. It's scary when you see that red number get bigger and bigger and bigger and bigger.
Right.
Like that's a scary moment. It can mess with your mind, your psychology, obviously your account. That'll mess with you. So I wait for the backside. Like I said, I think I said too, I never add to losers.
Mm-hmm.
I just don't do that. And from the beginning, I've said this, I always look at a year-long chart or 6 months, 3 months, whatever. Always look at the big picture so I can make sure that whatever I'm trading is fitting that big overall framework. If it doesn't fit that framework, nor if I can figure out where in that framework it is to create some predictability, I'm not going to mess with it. But sometimes you get caught up in, like, this is a 1 minute chart of just in that day, in that moment, that can create some bad trades. And then from there, it gets a little more specific to me and what I do. Like if I'm going long on a stock, I try to buy the dips, essentially buy the weakness, sell the strength.
Well, see, now that one off the back makes sense. Like some of these, I had to struggle with the don't be early part. My first reaction to that was like, well, hey, you're on time if you're early, and you're late if you're on time.
Right, yeah, I still live by that too.
Gotcha. But, like, it took me a minute to adjust.
Yeah, so that one, don't be an early short seller. You don't want to short sell early when the chart is still going up. But when I'm going long, I'm trying to buy those dips, sell strength. Because a lot of people, when they're going long, they will buy stocks at the top, right? It's already gone up 100%, 200%, whatever, and they'll buy at the top, and then it just keeps going down.
Right.
It's frustrating. People will try to buy these breakouts, but they literally buy the top. So I try to wait on these dips. Intraday, it could be an intraday dip. It could be a dip within that day. It could be a dip the next day, but I'll try to wait on a dip. I don't want to chase an entry. I want to wait on a point where I'm comfortable. And then from there, like I said, it's a little more specific to me. Like, is the trade ideal? Stick to known setups. I have 3 or 4 setups that I primarily trade. That's about it. I've found if I deviate from those setups, it doesn't go well. So I try to wait for my setups. If my setup's not there, I try to avoid even trading it. I don't even want to fool with it.
So when you say setups, what are we talking about here?
So setups being, so if I'm shorting a stock, right? A lot of times I will want to short the backside of the stock. So I will wait for that setup to kind of unfold before I get in. So I want the chart to look a specific way. So if I flip back here, right? So this massive, I can zoom in here, this massive run up right here.
Oh, wow.
Okay.
Got you.
So, a lot of times, one of my favorite shorting patterns, see, there was this run up here, these 4 big green candles, took this stock from $35 up all the way to $65. And then this first red candle, because this is a day, right, day to day, this first red candle is what I consider it to be a first red day pattern, right? It's had this amazing run up. This stock has doubled in the course of 4 days. So I'm waiting on this first red day, this first crack in the pattern. And a lot of times I will short the first red day. And you'll know it's red from when the market opens. It's red because it's that where it gets technical. But essentially I'm waiting for that first red day. When I see that first crack, that first red day, I'll short that. And this would have been a great short. It would have went from 60 and it closed down at 52. So that would have been $8 a share, which if you have 1,000 shares of that, you made $8,000.
That's nuts. So what happens the next line there where it dips back up?
Yeah, so these are called candlesticks. Most people, when they look at stock charts, I think just look at the lines. I always use what are called candlesticks. And basically what this does is it takes it from, so this when it's, first of all, when it's red, right? That you got to look at the color first. So when it's red, that means it opened here where the candle is filled in, right? So that's where it opened. That's where the stock opened on the day. Okay? The bottom of the filled in red candle is where it closed on the day. So it opened here, closed here. These wicks that go higher and lower. So this stock, this particular day, actually got up to $61.89. It opened here, got up to $61 or $62. And at one point it actually got down to 50, but it still managed to close at 53, basically.
Gotcha.
So I use candlesticks because it's a good, for me, it's just a good, quick visual. Like I had a whole book that I've read on just candlestick charting, but it's just a good, quick visual of, this big green candle here. I know it opened just real quick at 38, closed at 52. But I mean, it got all the way up to almost 55 and got down to, so it's just a quick visual representation. I use these for every chart I look at. Intraday, like I can look at it, the chart from the last couple days. I use candlesticks for everything.
That's incredible.
So these candles here are actually 2-minute candles.
So that's even a deeper dive. You're like Ant-Man.
Right. Yeah. But candles, that's what I use. Some people, I think, maybe still use line charts. I don't know. I don't. I haven't used a line chart since I started this. That was the first thing I learned real quick, was to use candles.
That's incredible.
But every candle, and it depends on the time frame. This is a year-long time frame. Every candle, in these instances, is like a day or two, depending on when you're catching it. But yeah, you can go as far out as you want or as far in as you want.
So when I'm looking at this, like now, with you zooming in and showing the candlesticks and breaking down what they mean, it doesn't look so crazy. Like I feel like I'm learning the matrix here. You know what I mean?
Yeah. So every candle is essentially a day. The little blue wicks below it is how much volume it had that day.
And volume is people who actually trade it,
are
buying or selling.
Right. So this stock for a long time was at $9.60. Never had any volume.
Oh, I see the little blue candles. I'm just not noticing that. The little blue candlesticks at the bottom.
Yeah. You can see some tiny little ones right there. But then, it had this massive run up, massive volume. When the backside hit, it was very clear that it was the backside. So.
Sorry, had to admit.
You're good.
So, yeah. So when you're talking about your rules, going back to your rules here.
Yeah.
Which one of these are stopping you from like, oh man, this could be, but it's outside of my rule? Talk to me about a situation where you've had that happen.
Well, so the one I was talking about, number 10, stick to known setups, right? Like if it's not fitting my criteria, or like I said, I have 3 or 4 patterns that I really trade pretty regularly. First red day that I just kind of talked about's one of my favorite. My most successful, whatever, patterns. I have a few others that I will trade, but if I don't see a pattern that I'm familiar with, if I'm not comfortable with it, or I don't find it to be a high odds setup, I will just walk away. I won't fool with it. I won't put it on my watch list, whatever. Yeah, that's part of being disciplined, right? Like at the end of the day, because I've gotten into setups that or into a stock that I'm not comfortable with, or isn't in my wheelhouse, so to speak, but typically doesn't go well for me, right? That's where I end up losing. So, yeah, and then I guess 11 goes with that, like have a trade plan. So I'm not just trading these things on a whim, right? Like the day before, and I only may trade on a given day for a few hours a day. Depends on how the day is and what the market is and the action looks like. But I may actually only physically trade for a few hours.
Right.
But the night before, I could be prepping for 3 or 4 hours, reviewing charts the day before, and seeing where they're fitting, where they are in patterns, what pattern might be coming. I create these thesis in this trade plan and create a watch list the night before. That way, when I'm at my screens in the morning, I already have stuff I'm watching. I already have plans in place. I have entries, exits planned. There's a plan. 80% of my trades come from my created watch list the day before.
Okay.
I will make some trades in a day on a stock that popped up on one of my scanners or screeners, or some breaking news came out, because I have apps for breaking news, a news feed app that feeds me live news like in the moment. And I have scanners that scan for certain stocks that fit certain criteria. So sometimes stuff will pop up and I will get into it. But 80% of what I do is a planned entry.
So for me, I'm a food guy. So for me, when I hear that, I think of, hey, it takes an hour to cook this thing, X amount of prep time, X amount of actual cook time. Is that what you're talking about as far as you actually spending time trading versus the prep work that goes into it?
Yeah, I probably spend more time prepping than I do. I can't say that. That's not entirely true. at least as much prep time, sometimes if not
Gotcha.
more, will be there versus the actual screen time. So a good example is yesterday. Yesterday is a good example. Yesterday was Friday. I had a watch list made. Within the first hour and a half of me sitting down, I was done on the day. I had a great morning. I hit my goals, hit my targets, had a great day. Didn't want to overtrade because one of my rules, I don't want to overtrade, right? Like you don't want to just trade to trade.
Right.
So I was done on the day. Walked away, did some stuff around the house, whatever. I was done. Rule 13, greed kills, and it will. And I've had this happen before. There's been days I've texted Jasmine. I was like, I just had a great morning. Tell me to walk away. Like to try to keep myself from literally walking away, so I don't just trade more. There's been a couple times I've done that. There's also been some times I can remember one day she didn't text me back, and then I texted her back like an hour or two later and was like, I gave some of that back.
I love that.
I didn't walk away. So yeah, just gotta stay disciplined. Discipline is 90% of this.
Right.
You can have all the knowledge in the world, but if you can't stay disciplined, you will not make a long-term thing out of this. There's just no chance of it. You gotta stay disciplined. You gotta have good risk. Or there's just no chance.
But I love how you have first of all, the rules actually written down, right? But then you also have your safety valve, right? The missus there, or you just like, hey man, it's a great day.
Yeah.
Stop me now.
Yeah. I got rule, and then I got, like I said, I got a whiteboard, like an actual physical whiteboard beside me, where I have a couple other like reminders or rules or whatever. But yeah, discipline is something you'll forever work on. I still sometimes will lose discipline, or something that gets me in trouble a lot isn't so much on the short side of things, but on the long side, I'll try to long a stock and it'll be up 10% or 15%, which is great, right? Like I could make 10-15% of my money in an hour, and I'm like, oh, this is great, let me just cash out. But instead of cashing out or exiting the position, I'll be like, this thing can go up another 10%. And then I slowly watch it just trickle down little by little. I'm like, oh, okay, it's gonna bounce. It never bounces. And I go from being up 15% to being up 5%.
Dude, that is beyond me. I could not be trusted with something like that. Because the idea of...
Well, that's why you try to get these rules. You try to follow them as best you can.
Right.
Something I also do, or I've been doing more of, is I will scale into a position or scale out. So I'm, whether I'm going long or short, I may buy 1,000 shares, buy 1,000 shares, buy 1,000 shares. It goes up, right? Keep kind of adding. And then as it continues to go up, I'll start locking in gains. I'll take out half of my position or a third of my position and leave some in there. See what it does, but I'll go ahead and lock in some gains.
Okay.
If that makes sense.
But that helps you calibrate for future sessions, right?
Yeah, scaling is just something I've gotten into a little more recently, where I'll scale in or out. Like I don't have any handy, but I'm trying to actually. One of the things I wrote down over here is to start doing more screenshots of my entries and exits. But Friday is a good example. Friday on one stock, I had like 4 entries and 3 exits. So the screenshot of the chart is pretty crazy because you see all these entries and exits, but it's just because I scaled in and scaled out.
Right. So now let me ask you this: when you have, I guess when you have a situation where you're trying to make these little, sorry, not even talking about your, I'm talking about your screenshots. Sorry, I'm all over the place.
No, you're fine.
With your screenshots, where I have problems with what I do is like I'm constantly making little notes. Oh, this could help that could help that, but then returning back to said notes is an issue for me. So if you start doing the screenshots, like how much time do you allot for like review of those screenshots and utilize that information?
No, yeah, that's good. So I have 2 programs. I have so much software I use, but I have 2 programs in particular that I use for trade review, because I do spend some significant time either in the evenings or on the weekends reviewing trades. Right? You have to review trades, see what you did right, see what you did wrong, and build on that. So a lot of my time outside of the market is spent on review.
So like
right? Prep is part of it, but
game
review is
film,
also a big part
like
of it.
game film for
Yeah.
sports, right?
Yeah. Yeah, so instead of watching game film, I'm looking at my previous trades, seeing what I did good, what I did wrong, whatever. But I have two pieces of software I use. Evernote. Probably heard of Evernote.
No, all of this
No?
is new to me.
Okay. So Evernote's free.
Uh-huh.
It literally is a note-taking software, but in that note-taking software, you can put screenshots into that. So I will use that to take notes on a given trade, and I will upload my screenshot into Evernote with notes on the trade, so I can review that. And I specifically do that on trades I take big losses on, so I can review those very meticulously to not make that mistake again. The other piece of software I use is called TraderSync. That software basically takes every trade you've ever executed and factors in any statistic you could ever want. Right? It shows your average wins, your average loss in percentage form, dollar forms, your average risk, where the stock was at the time of day, where your best times a day. I mean, there is nothing it doesn't create for you. Great software. So I use both of those pieces of software to help me know what I'm doing right, doing wrong. Actually, TraderSync has helped me to learn that I trade best first thing in the mornings and right before market close. I suck really, really bad at trading in the afternoon.
Why do you think that is?
So
what's your analysis on that?
There's less volatility in the afternoon. When the market opens or pre-market, there's a lot of volatility.
Gotcha.
And then right before the market closes, power hour they call it, the last hour of the market open, there's a lot of volatility. During the afternoon, it's a little more stagnant, less liquidity, which just means less volume, less buyers and sellers. So a lot of people call it the zombie hours. Just not a lot going on. Yeah. So I've gotten to a point now where I trade the first hour or two of the morning, find some stuff to do in the afternoon, either around the house, review trades, whatever. And a lot of times I'll come back an hour before power hour, and do the last part of the day. But some of my software helped me to really show like my profitability in the first and last 2 hours of the day was like way bigger than it was in the afternoons. Actually, in the afternoon, sometimes I'm just flat out losing money. That's where I'm just trading to trade.
Trading to trade. I got you.
Yeah, I'm just buying and selling because I can.
Right.
It's
now,
not doing
so
any
nothing
favors.
to do with your prep work or any of that stuff. It's just.
Yeah, it could be something that popped up on a scanner, or be like, maybe I traded it that morning and I'm like, oh, it's gonna do this for the rest of the day, and I'll get in it. But it's not. It's just pure speculation. It's not really a good entry. Now, on occasion, there are good afternoon entries on a great dip buy opportunity or something.
Right.
But 95% of my short selling comes first thing in the mornings. I'll short a stock in the morning and let it fade the rest of the day. I don't do much shorting after 9:30, 10 a.m. my time. Very little to none. And then longing, that's more of the late day thing. But anyway, that software I use helped me to see this. So just by reviewing trades, reviewing the statistics, it was crystal clear. It's crystal clear. Like it couldn't be any more right in front of me how clear it was. I just need to not be here in the afternoons. Or if I am here, I'm not trading. I'm reviewing, or I'm doing prep, or I'm something else. I'm not trading. Yeah. So that software, those two pieces of software help tremendously with review. Evernote, by the way, it's free. It's great software for anything. It could be great for. It's just note-taking software, but the capabilities as far as screenshots and stuff like that is pretty awesome.
I wrote it down. I'm gonna definitely take advantage of that myself, because I need to get myself organized. Because when I say like the sticky note card, notebook, mini notebook situation is ridiculous. I need to consolidate it all.
So when I first started trading on a laptop, I had a laptop, notebook paper, sticky notes everywhere. It was a mess, just cluttered mess. And actually somebody I was like, well, I should use Evernote. That changed my world.
That changed my world, and thus you changed mine. See? And for you people out there, please pay attention to that. Yeah.
Evernote.
Because let me tell you, I'm impressed that you said the word statistic. See, I just did it. I've always struggled with that. See, this is what you're bringing to the show. You're classing up the joint, man. I really appreciate that. But when you start talking,
about all that?
No. See, you're gonna have to learn to take compliments, buddy.
Yeah.
So when I like looking at all this stuff, and when I first saw the screen, and my eyes just kind of like, whoa, what's going on? Right, going back to like this right here, right, showing the audience here your screen share here. So when I look at that screen at first, it was like, man, this dude is like a super genius. Like, I don't understand how I'm so stupid. But you and your work and persistence allows it to kind of, I mean, for you, it probably seems like nothing now.
Yeah.
But I now understand a little bit.
Nope. I'll clarify that immediately. I'm no genius. I'm not some mathematical whiz. I can't. There's some people you can listen to about trading, like, oh, these algorithms and Nope, I know none of that.
Right.
You can put 1,000 different indicators on this chart to make it look crazy. Lines everywhere. I keep it simple, the old KISS method. Keep it simple, stupid. I use a couple indicators. That's about it. I have a system that just predicates on support and resistance levels. That's about it. I am no genius, but I studied a ton. I studied for a year before I even made my first trade. And the studying was learning patterns and learning how to adapt, because yes, these patterns repeat, but it's not an exact science. The market, is constantly changing. And the general rule is 9 out of 10 stocks follow the overall market. So if you look at the indexes on the day, like on one of my screens, I have the major indexes up on the screen of how the overall markets are performing. If they're performing on a high note, I know that most stocks are going to follow that pattern. And inversely, if the market's having a down day, I know that it's probably a better day for shorting. So 9 out of 10 stocks follow the market. So you always have to be able to adapt. But the studying for me was just studying repetition of patterns, how to see it, how to recognize it, how to size in, knowing how to. I guess when you talk about it at a high level, maybe it sounds easy, but try it without the right knowledge, and you will discover how hard and how fast you can lose money.
Oh yeah, but that's like anything else, right? I mean, what's your essentially?
You go to college, you study something for what? Well, let's just say Jasmine PA school. That's a little more specific than a general 4-year degree. You had to go to college for like 2 years, just for 3 years, just for PA school, just for that, right? For me doing this, I studied for 3 years, a whole year before I even executed a single trade. And I can go back in my software or some of my old Excel spreadsheets. Some of my first trades were like 10 shares of a stock trading at 25 cents, so my gains or losses would be like $1, but it was just to get familiarity with the software, with the brokers, the process. I wasn't focused on the dollars, I was focused on percentages. But yeah, some of my first trades were minuscule, right? Like just dollars, literal $1, $2, $10. I remember, I'll never forget my first $100 gain. Like that is forever etched in my mind, because my first trades for a long time were so small, right? Then I finally started sizing up and my account started growing. I'll still to this day never forget my first $100 gain and how I felt. Like that was a monumentous day. It was actually I could pull up the chart.
Please, because
let me tell you exactly when it was.
Like, at first,
it was.
I could never understand. No, I'm a filibuster while you get your chart up. You let me know when you're ready. But at first, when I see people that have like their first dollar, right, framed, I couldn't really understand. It's like, man, why are they spending that dollar? What are they doing? But like now, being a business owner, getting into it a little bit, is like, oh, I can't wait. I cannot wait. That's all. Slick holding Dean back. It's like, hey, just relax, just wait, because I want that to be special, because I know it's gonna hit hard.
Yeah.
Now, what am I looking at here?
So this is December of 2018. No, we're in 2019. December of 2019. I was right at the new year. I still remember I bought this stock right when it like broke convincingly over $2 a share, and I actually sold it. I think it was somewhere in here. It hit like, may have been in this mass euphoria,
right? Somewhere
in here, in this range. I can't remember the exact buy and sells, but somewhere in this 3-day range, right at the beginning of the year, I made my first $100 on this stock, and it went from in the 2s into the threes or just under or whatever.
Right.
But that was my first like $100, which is funny because if you look at this chart over the course of the last, now mind you, this is December going into the new
Right.
year. Look what this thing did. Like,
So where? So December's towards the end there, right?
This thing.
Oh.
Yeah, I mean, I traded it back like back in here.
Mhm.
So that's where I traded it, right? You can't even tell how big that was because of this massive move that came later.
Right.
But if you look at it on a better scale, you'll see volume, whatever. But yeah, I traded it back in here. Later on, you know, like a year and a half later, it went crazy supernova.
Right.
But anyway, yeah, that was my first. And I'll never forget that.
Right.
But,
Man, I can't wait for you to get into the Warren Buffett like range.
yeah,
Like, 'cause
that's
I'm
a
telling you,
pipe dream there.
because people hang on his every word. Like, what do you say about McDonald's? What's he talking about? You know, just the idea that he just very plainly compounding interest. I took my entire life and I waited. You know what I mean? He's just right, and he has his set of rules, man. If you haven't checked out that documentary on HBO, what is it actually called? Defining Warren Buffett or Building or something like that. But look that up, man. I'm telling you that.
I'll check it out.
For me, on a personal tip, and I think you as a trader, a fellow trader, I think that that'll shake things up.
Oh yeah, I've read some of his books.
Mhm.
I mean, when it comes to investing, especially long term, he's got that figured out for
Right.
sure. And you know, I mean, yeah, I do my trading stuff, but I still have some longer term things that I do that Warren Buffett is a great guy to learn from. But yeah, he's in a whole other realm. I'll never be a Warren Buffett.
Whoa,
Put that out there.
whoa. Yeah. Pump the brakes, because you just never know, right? I mean, he
but I mean,
was
too,
around.
part of it.
Watch that documentary, because he started when
check
he
it
was
out.
like a
I'll check it
kid, you know, buying stale candy in his little wagon and selling it for a little bit more, and then saving money for, you know, this thing, and he just did that his entire life. And literally, you know, you're in your 30s now, like he's a lot older, so of course he's got more time and experience, and you know he's compiled the stats, man, for sure.
Oh yeah, he's got a lifetime worth of knowledge.
Oh yeah,
literally.
and gave most of it away to the Bill and Melinda Gates Foundation. That's incredible.
Yeah.
Check that out, man. But when I look at that stuff, like, my favorite thing about all of this is, you know, everyone has to have the reason of why. And I'm checking out your shirt throughout the whole show here, right? Let me see that shirt.
Yeah.
Just scroll it for me.
You scroll up.
Husband.
Let me check.
Yeah.
Husband. Dad.
Uh-huh.
Trading legend.
I love it. I love it. I love it, but man.
So this keeps it into perspective, though, right?
Right.
I got to be a husband and a dad first, right? I got to keep that balance, which I will say that's one thing about this that I love versus my old job is I was consumed by it. You know, I couldn't hardly be home. But anyway, this just allows me now. I can do whatever I got to do with the kids. You know, every morning I get, like, literally now our life is every morning I get them ready for school.
Mm-hmm.
You know, I get them off the bus, which is right outside the house. But, you know, I can help them with homework. If a kid sick, I can pick them up. Or actually, Sebastian was out because we had COVID go through our household not too long ago. Wow. So I had the kids home with me for a couple weeks, you know, during all that. And if I'd have been at Walgreens, I don't know what we would have done. Right. Like, Jasmine just started her job. She can't miss. I can't just take 2 weeks off like that. That's just not something you can do. But like doing this now wasn't a problem, right? Like I did and I could still trade some. A little tougher when the kids are home, but yeah, this just gives me a lot of flexibility to do whatever I need to do. And then it allows Jasmine to fully especially she's just starting her career. Right. So she can fully focus on that. She doesn't have to worry about doing anything with kids in the morning. She can just focus on getting herself ready, getting to work, it just allows her to focus. Cause I know how important it is when you're starting out. You need to be able to really focus on that. So that allows her to do that too. Right. So yeah, balance is huge, and this definitely allows for flexibility without a doubt. But I still have to be careful on balance. The flexibility is easy. If I get a phone call, I can get up and go. But where I have to be careful is when I don't get those phone calls and I can sit in here all day. Right. The time I'm up till the time I go to bed, and I'm trading and I'm reviewing and I'm prepping. You know, I have to be careful not to get too consumed by this, because you definitely can. You know, I can put in easy 60 hours into the stuff I want to, and I have to be careful.
Man, but that's amazing. Like the family unit, right? And I love how husband is first, because a lot of people kind of reverse that, right? Well, I'm a dad first, and like, no. First, you got to take care of you, right? Then you can be a better husband, and you two together, right, are taking care of the household. Exactly. But if it's out of alignment, look, we're older now, Mr. Juday, so you know, we're far removed from just hooping all day long at the UAW, right?
Sun up to sundown, 7 days a week.
So, but the ideal is, you know, making sure you're in alignment, because we know how it is, especially in our old age now, right? When you have one thing out of alignment, it can cause all kinds of problems, and that can be that's in any sort of enterprise. So I love the order there. I love what you're doing, man. When I look at these charts and stuff, like, I'm gonna show the people one more time, like this stuff, man.
Well, actually, I'm glad you're pulling this one up, because this was one of my first $100 trades way back when, you know, when the chart wasn't doing much. But you can see this chart fits that pattern. Supernova goes straight up, parabolic, comes right back down.
Crazy. The trends that you can pick up on.
They all do this. Yeah, they all do this same thing.
Right.
It's just, it's rinse and repeat. That's why if I miss a trade or can't find an entry, I don't get upset. I used to get upset about it, but now I don't, because I know this is going to happen again. It happens pretty much every day. There's thousands of stocks out there that at least one or two are there's a play. Most days. There's been a few days I walk away because there's nothing, but there's always some opportunity.
That's amazing.
Finding these can be tricky, but that's
the thing. You know, we talked about, you know, kids kicking our butts in Call of Duty, although I'm sure it happens more to me than you, but that they have more time, you know, they have more time. Yeah. So it's all about so it comes down to experience. That's why Warren Buffett is so great at what he does, because, man, I've made some of the stupidest decisions you've ever seen in your life, right? And I learned from it, right? People who are that successful, you know, they don't really see failure, like our Uncle GC would say, right? Which I'm so, by the way, now I'm thinking about this, man, I am so glad you suggested that. You know, it's one, like, we've been pretty heavy with our book club, but, like, I really want to get that one in there. But I don't think a lot of people will really get it, you know what I mean? And that's okay. That's how he kind of describes it. Like, it's a very small amount of people who do that. Obsession.
It's, you know, I think a lot of people, you just have to be open to it and apply it to the right thing in life, whatever that for you may be, you know. But yeah,
tailor it for yourself, right?
Right, yeah. Apply it where you need to apply it.
Well, man, I love it.
It's a great read.
I love it. I love the balance too. And we didn't even get into the hardware stuff, man. When I'm looking at all this stuff, right, you know, I saw the boxes and I saw the setup, and I was thinking about that for myself, like, oh, I could do so much with that. Oh, that's incredible. But yeah, so talk to me a little bit about your hardware, software. I mean, you talked about software, but your hardware, man. Talk to me a little bit about this.
So, well, in the first picture, right, it's the laptop, right? That's all it was. That I bought that laptop when I started this journey. And I wanted to buy a good laptop, you know, something that had some power to run some decent software and a decent size screen. It was not a portable laptop. That thing weighed like, I don't know, the heaviest laptop you can imagine. That's what it weighed. It was huge. That's how I started, you know, one screen, a laptop, and I had notebooks to the left, to the right, and I would watch videos and watch lessons, and I would just look at charts, and I would take notes, draw pictures, take notes, and I did that for a year or more. Finally, I think it was a year, maybe two later, I bought a actual desktop with one screen. It was like a 24-inch screen, like a more traditional setup.
Right.
And then I was finally able to have a little more screen size, and I had a desktop computer that I future-proofed. I used a website, like a part-picking website, and bought like the best graphic cards, the, you know, liquid cooling and best hard drives, RAM, all this stuff, because I knew at some point I was going to want multiple screens, showing multiple charts, running a bunch of intensive software, and I was going to need some hardware to back that up. So I at least bought a future-proofed desktop, and then I think it was a year or so late. Well, actually, may have been a year and a half. I don't know. I can't remember the exact timelines, but just a week ago, I just got this set up. But I mean, it took me 3 years to get to this point. This was not overnight.
Right.
This wasn't fast. It wasn't easy. So yeah, I mean, now I'm running the 3 screens, which I will say is not. You don't have to have this, right? It's not necessary.
Well, how much better? How much better is it?
Okay, so for me, what I'm doing, yes, I love it, because when I had one screen, I had to alt tab until my fingers fell off between screens. Alt tab between broker, alt tab between info, alt tab between screener, alt tab between news. I was alt tabbing and it was a pain. I hated it. So now I can have, all my screens have different things in specific places, and it works for me. I love it. Yeah, it took a long time to get to this point, but also, just to clarify, I've never heard somebody say, oh, if I had one more screen, I'd be profitable. Like, no, it's not the case, but is it nice? Yes, it's nice. And it's very helpful. Like, now I can just turn my head a little bit or move my eyes, and I got everything I need right in front of me. I don't have to alt tab anymore.
Hey, you acting that out is so just move my head, my eyes. It's hilarious.
Yeah, like it's nice. I worked hard for this. I know I've wanted this for a long time. Dude, there was a guy that's helped me a lot with my trading journey that I met really through the internet and the classes I was in or whatever. But I probably spent a month going back and forth between, okay, how do I want to set this up? Do I want like 2 screens on top of each other and a screen? I spent so much time trying to figure out how I wanted this, and I finally got it the way I wanted. And yeah.
Now let me ask you this. Because I often try to do these little trade-offs, right? With you getting this gear, and though it's for work, was there some sort of offset? Like the kids are like, okay, what about us? And Jazz is okay, I'm gonna.
I didn't have to worry about the kids. Jasmine. Okay, so we got a new patio set. We got a new dining room set.
Yes, that's what I'm talking about.
Yeah, so there was some give and take there. Actually, if you behind me, I don't know if anybody's noticed, but I have this other computer screen behind me. It's like my old monitor. It's still a really good monitor, but I was like, hey, Jasmine, look, you can have this monitor, and you can have 2 monitors for work now. Right. But that didn't cut it, so that's where the dining room set and patio sets and things came into play.
That's brilliant, man. But that's it. You take care of the husband. That part is pretty straightforward. I'm not saying it's easy by no means. I got my 4 kids. You got your 4. You include the dogs, right?
2 dogs, 2 kids. I got my dog sitting here beside me pretty much all the time.
Yeah, man. But the idea of that balance, right? That looping balance, I don't know if anybody's watched, what was it? Disney Plus. The Loki thing, right?
The kids did. I saw bits and pieces of it.
Oh, it's fantastic, man. It sets up so many things. But the idea that, science released that the universe is a donut, right? This infinite loop. Yeah. Right? So when you think about it from the cosmos of how much balance is necessary, right? The idea that Jupiter is so big, like we don't know. I mean, I've got my belief system, but like even if you don't believe in the, religion and all of that stuff, right? The idea that Jupiter happens to be so big that it can intercept meteors the size of Earth. The size of Earth, bro.
Right.
You need balance in all.
It's like that grain of rice thing I showed you.
Oh yes.
Right? It's all about perspective.
Yeah, that's what we talked about. We gave you a shout out there with Tony. That grain of rice thing is nuts. It's nuts. If 1 grain of rice equals $100,000, how many grains of rice does Jeff Bezos have? And it's bananas. Please check that out. Yeah, man. But the idea that all caps right there, husband, period. Right?
Yep.
Dad, period.
Number 1.
And all of that feeds into it. I mean, even how you even got to this. You and Jazz with that 3-year plan. Got to get through PA school, right? You being at home, making that, her doing that allows you to be at home. And then you had some COVID stuff, but you're spending more time with family. You're home. Something you couldn't have done if you were with Wells Fargo, right? Even to like now I don't have to alt tab, like waste that time and energy right now. I just kind of look over to my left and right, like all this stuff. Like, look how it's just like fitting together, man. That's really cool.
Yeah, and I mean, ultimately, too, a lot of the reasons I made this jump and she went to PA school is obviously so we can provide better lives for ourselves and kids. You know, at the end of the day, that's why we do it.
Mm-hmm.
So yeah, they'll benefit from this too,
Right.
partially because anytime I'm needed, I can be there. I don't have to. Dude, for me to get time off of work sometimes at Walgreens was so hard.
yeah.
Like, especially at the drop, kids, they get sick this, that, or the other.
Yes.
Yeah, so anyway, I don't have to worry about that anymore. So now if they have an event
Right.
or a sporting event or something at school, or
Right.
they have the day off of school, for some random fall break or parent-teacher conference or whatever, like, all good. I don't have anything to worry about. So yeah, that helps create a lot of balance. It's wonderful. Wonderful. So a lot of this, was for the kids too.
Right. But so that's what I'm saying though, right? That balance. Because existentially, if you look way into the future, they're gonna remember like dad being around. Like that's a huge thing.
Yeah.
Yeah.
It's
a huge thing.
I remember when I was a kid growing up, and this is my mother, best mother in the world, right? Like, but I remember when we were younger, there was a point in our lives when we were younger where she traveled all the time for work. She didn't have a choice. She had to, right? But I mean, I very specifically remember that she'd always bring us stuff back. Like she'd go to China, like crazy places for work, and she'd bring us stuff back. But I mean, she was gone a lot. It didn't last real long, but there was a period of time she had to travel a lot, and I remember that. Not that it was a bad time or anything bad, but yeah, I just remember she had to travel a lot, and she worked her butt off,
right, man,
to provide for us. But that included her being gone, a lot at certain points in time. So yeah, I mean, I remember stuff like that, and I'm sure they're gonna remember times when, dude, when I was at Walgreens, I was never at home for holidays. I'd be home Christmas Day,
Right.
But I mean, holidays, I was consumed. Holidays in retail, that's the busiest time.
Right.
So I was consumed by that. So they'll remember that too, but hopefully now they'll remember some things for the better going forward.
Right.
No more of that.
See, that's what I'm saying,
It's
man.
horrible.
And that's gonna impact them, and thus impact the world. So while Jasmine and other heroes like her are doing the immediate impacting, right? You're impacting long term.
I hope so.
There you have it.
I hope so.
Sure. I know you're definitely impacting me. Let me tell you something. Evernote may save my life. Right.
It's amazing. It's free. There's a premium version,
Yeah.
but I mean, I use the free version, and I mean, like I said, note taking. You can upload screenshots. It's phenomenal software.
That's incredible.
It's gonna blow your mind, and it's easy. You just literally click, drag the screenshot into Evernote, drop it, boom, done.
That's incredible. Well, Mr. Juday, look, we'll have to keep an eye on you, man. Definitely welcome
Yes, sir,
back,
we
and
do.
especially with the other shows, you can just hop on any time. But I like this
Yeah,
in-depth
absolutely.
stuff. Yeah,
I have a lot more that I could get. I can talk about this for days.
that's what I'm talking about.
For days.
We'll leave that tease right there. But thank you so much for joining me, and thank you all
Oh, it's
for
been
joining
awesome,
me as
man.
well. Any
Appreciate it.
socials or any promotions or anything?
Not for me. I have a Twitter, but I purposely don't put it out there only because I really just use it to follow certain people or trends or these boiler room. I use it for that. I don't really use it for I'm pretty inactive on social media, unfortunately.
That's incredible. It's like I try to keep it low key. Man, look, you're about to blow up in a major way. You're about to help blow me up. Good night. But yeah. So I'm J-Zilla. That's my main man, full-time day trader, husband,
Full-time.
dad, trader legend.
We'll do it again.
Oh, we're
Do it
definitely
again.
gonna do it again, man. Appreciate you joining me, and thank y'all for
Yes, sir.
joining me. Peace.